Thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the chart. So Bitcoin getting a bounce off of that daily point of control from this consolidation range from basically December. For the last 65 days we've been going in between these channels, and this diagonal pitch fan bounce off the 618, coming back to the 706, just below the 706 of this diagonal pitch fan we've had pricing for over a year. Do we make our way up to that 44.4 region? We were talking about this 50% recovery of this vector drop to the downside from that 48k range or not. Let's go ahead and look at the liquidity. What is the liquidity? Well, people lock their liquidity into the charts to get burnt to a crisp by the market maker for not using a stop loss, and we get to see where those liquidations are. So let's do it now. In the last 24 hours, you had longs and shorts to the tune of 8 million on both sides for BTC, getting wrecked on both sides.
Fatality.
On ETH, you had more shorts getting squeezed than longs, 16 million in shorts squeezed for ETH. And others, you have Monero and Sol, a bunch of other things. The Sol network, I believe, was down, but still they used that opportunity to squeeze some shorts to the tune of 1.4 million, and a bunch of other alts being used as catalysts to squeeze. You have DYM, Dimension, spelled wrong to be stylish, whatever this is, up 27%. Monero down 35. Somebody had to exchange some money anonymously, and yeah, let's go into the heat map here. Let's try out this Model 2 one that they have. So you have a little bit more of heat to the upside on the 43.6 region, a good 400 million up there at the top of the range. Holding this level here, looks like we could stab up to that 44k. Today's Wednesday, February 7th. The continuation of Tuesday should be the move. Remember, on Thursday we do have that news. What news, you ask? Well, go to forexfactory.com and go ahead and go through the week, and you can see there is some unemployment claims pre-market on Thursday, and CPI for the fake facade Chinese government currency here at the PPI for their fake made-up numbers, because their entire economy is fake. You can look up ghost cities and Evergrande and tofu dreg construction. I could go on for ages about how the Chinese government is terrible, but it's not a politics show. So you got the bond auction also as a catalyst for the dollar to possibly go higher on Friday. So this is why the dollar is looking to set up going higher. We were talking about coming up into this gap. It's going on its way, going quite nicely above this range. Took out both of these ranges here and continuing possibly higher, coming back into this candle to possibly continue up to this gap. Pardon me. So, looking at the weekly for Bitcoin, we got that bullish week about 2 weeks ago. Are we coming back into some of this level? One thing to watch out for on Momentum Master is this cross down event of the baselines of the weekly. This is why we're saying, do we come back down to that 32k? That's why we have some of these ideas to look at for a potential fatigue. Why are we looking at a potential fatigue? Well, if we look at the open interest here, we have 3.46 in open interest, $3.45 billion. So this is quite high. If you go back historically, you know, it goes back and it flushes all the way down to 38. It came down to 3 billion. Even then, we still have a large open interest. We'd want to see the open interest drop beneath 2 billion. If we're being honest, you can go back in time to when that occurred and what the price was at. So if we go back to 26k, what was the open interest down there? 2 billion. So at some point they're going to purge that 1.4 billion in long liquidity leading into the halving, in my humble opinion. It just makes the sense to reposition lower and take your profits when you got them. So is that what we're going to see in the coming days as the dollar starts to potentially give bullish tones? And now we're just holding the range, potentially going higher as we see some shorts opening up as we squeeze them and the interest staying high. So I'm not interested in entering when the open interest is high. I want to see the purge of some side of liquidity first, and we haven't gotten it. We've been holding this range for the last 9 days or so. So I'm still being patient. Bitcoin's not going to bore me out. All right, so coming to our analysis from yesterday, we were talking about possibly coming down to this wick. We did not get that push down. In fact, we actually held the point of control. What we were seeing on the live was the bullish lower probability retrace into this 382, the shallow retrace, we said. And then I don't normally take those shallow retraces, but it held the shallow retrace and continued higher. Algorithmically, you're just going sideways in this channel. You could just take from high to low and just do this and see, oh, we're trading in a range, and you got it. And that's why we're saying I'm not interested in this, because it's just going to chop people to pieces. We're essentially trading in an ascending channel, but yeah, we're looking at a potential coming up to this 44.4 overall. We are holding this point of control and going higher, potentially speaking. We got above the 706. Do we come up to break this 43.6 region? The liquidity has something up here to the tune of 200 million up in that 43.5 region. If we go to the weekly, it's even Steven on both sides, but you got a thicker band up in that 43.6. And if you go to a higher time frame, it's saying you have 5 billion up at 44 even, and 44, yeah, you got a bunch of billions up in this range on the 3-month time frame, leading to that 44.1. So I'm seeing higher liquidity to the upside. So overall, looking for a narrative bounce up to that 44.4 and potentially in the middle of this candle at 45.2. All right, so they're just holding the line here. This is a 11 days now we've been in this range. Let's go ahead and make our descent through the time frames and take a look at the momentum. Link in the description for more. All right, you can scroll down the features, toggle everything at your leisure at Bitcoin's bottom. But the rocket ships, before we knew they were going to take off in November 2022, as we traced over price action for 30 hours plus and seeing this trend cloud and the baselines reclaimed. The schematic is how you would look at price action for a nice double bottom idea. So coming to the 3-day, 3-day has 2 days to close this out. We're attempting to reclaim this thin boy baseline on the 3-day after previously having a cross down event on the December 15th candle, insinuating a fatigue if we did push up to here, which we did. Still have yet to see a deeper pullback. We were talking about every time you had this cross down event, you do pull back about 18%, and we were talking about that potential with the pre-halving idea coming into that retrace zone. So that would take you all the way down to that 34K bit of liquidity down there. So if we do come up, is it to fade down into these levels for real? Is this a B wave retrace into a deeper C pullback? That is the question. Coming to the 3-day, you're getting even Steven on the money flow and the RSI. Williams at the even 50 level, stochastic looking to potentially cross down on the 3-day, still on its path to being, it's ambiguous on the 3-day right here right now. If we look at the daily, it's looking to potentially double top in a hardcore manner. The Williams cross up event still showing some momentum to push up the stochastic RSI. The thing we've been meeting with resistance on, causing this range to be ambiguous, is this daily cloud. So this daily cloud not curving and kind of heading in this manner while we wick into the cloud, not getting above it and staying above the point of control, but overall just barcoding, railroad tracks, whatever you want to call it, sideways for 9 days in this range. Not an interesting thing unless you can nurse your trade, and I cannot, so I'm not interested in that type of entry level. I like the bottom recovery, V-shaped into profit type ideas that are calculated and planned out well. Swing hard and get paid hard. So coming to the 22-hour time frame, getting the money flow beneath the RSI, this disparity that we talk about often coming back to the RSI potentially. This happened over here on Monday off the 236. We bounced up into that level. Do we get that same kind of bounce on the 22? You're getting the cross down event to contend with alongside a cross down event of the Williams, so not the most opportune signal for a long here. Coming to the 12-hour also had a cross down event that you're playing with against the momentum here. The stochastic played out to reset here. The money flow came beneath the RSI, but the Williams still potentially on that suppression path. Once again, ambiguous. Looking at the 6-hour. Six-hour has reclaimed the cloud here since Tuesday, coming back above that point of control as we talked about with the shallow retrace to the 382 and off to the races. Not really liking the levels here that we bounced at. It's just ping-ponging beneath from both sides of the liquidity. Coming to the 4-hour, also ambiguous, nothing to talk about other than the cloud reclamation and the cloud starting to shift here on the 4-hour. This was what we were looking at in terms of curvature, but it started to curve back up as it reclaimed on that shallow retrace. Coming to the hourly. Sometimes Bitcoin tries to kill you with boredom, and they try to hold the range and get you to just lose interest entirely. It's a test of patience for sure, but still keeping on target, looking at key levels and zones where interest could be peaked. Right here is not one of them, so we're looking at what could happen as we possibly break out. This is why the 786 and the 65 region, this becomes like a resistance zone. Getting above that starts to aim at targets above the 44.4 and whatnot. So looking at the hourly starting to possibly get suppressed here and reset by the Williams. On the hourly time frame, we are getting a cross down event of the baselines here. Once again, on the liquidity end of things, you come down to that 42.7, stopping out the higher leveraged people, but overall that 43.6 has a juicier target on the weekly. Once again, up above you have those 3 billion at 44, 5 billion at 44 even, 6 3 billion at 44,184. So shorts overall have a little bit of a majority here to signify coming up to that 44.4 region. All right, so watch out for shorts. It could be squeezing them to the upside. Let's look at a broken time frame and see if there's anything that is percolating on some of these broken time frames. 45-minute possibly resetting. Let's look at the 75. All right, so we're gonna go to the Dixie. Well, we already looked at the Dixie, so we're gonna look at the indices and total. We'll start with total and Bitcoin dominance and all that. So the dominance coming down slightly here, but basically holding a range. The dominance dropping potentially insinuates the alts doing a rally. We were looking at the USDT dominance possibly coming lower, starting to come off of that idea from Tuesday. If the USDT dominance drops, then that means that things go up because they put the USDT into trades. Looking at total 3 still holding the 706 level, potentially coming higher. Just range bound action right now. I guess they're waiting for that bond confirmation for what the dollar's going to do, but the dollar front runs these ideas, and we've already made a stab at the buy side liquidity, so finishing the job and coming up into this gap is more likely than not. Sure, you could come back into this, but it's kind of a balanced range, and this could be a breakaway in order to come up to here. So if the dollar does continue on its bullish with the bond auctions coming, that could spell some downside for Bitcoin. All right, let's go see if there's anyone. Yo, Dingo, what's up? Let's go see if you guys have any questions. Now's the time to ask. Really kind of range bound, not really interested in trading in this range, so waiting for more of a push to a direction and making a decision from that point. So analyzing our key levels. Did not really make a change from yesterday. It's basically been in here for 9+ days. Let's go ahead and look at the overall volume profiles here. Like you can see each day broken down. You have a bunch. There's a naked point of control down here at 42,152 that we could come down and touch, but we came pretty close to it, so we kind of bounced off that idea. There was a point of control back here from January 30th. So yeah, it's basically all of these is a day. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 days in this range. Wish I had more to tell you, but not really. Yesterday, looking at NASDAQ, we were seeing in our chat, whoa, from NASDAQ we were seeing this fade up here in the pre-market. It came to a level we were looking at. What do I mean by that? Well, if we go back to here, we had some nukes appearing, and it came to an interest zone with this red deviation level, and then it started to nuke out, coming to that 2.5 region. So the nukes did play out on NQ. We can throw it on for you and show you that. Telling you to watch out if you were longing, and then it started to come back down. All right, so are we going to make a push for an NQ? Once again, the dollar is the thing that everyone is looking towards for permission for upside. The risk on assets looking for permission from the dollar or not. Dollar kind of retracing a little bit, giving them a bit of a reprieve. Dollar and indices are not one-to-one, so they can still rip even if dollar goes up. Bitcoin is a little bit more timid when it comes to the dollar and gets affected by it easier. Although the correlation has dropped since the bear market occurred with the FTX and everything, they kind of broke correlation one-to-one. It used to be much more sensitive back in 2021. Yeah. Sorry, I don't have a clear direction. If I had to call it, I would say the levels to the upside are more juicy and attractive to come up to that 44K region. Overall, open interest is high in general, not abating, and then you're getting more shorts entering with few liquidations. You had a hedged long, looks like it got liquidated there, $4.5 million long, as it didn't even really drop that much, so somebody was hedging and got squeezed on both ends. So does it continue? There's still short interest opening. The longs are kind of closing out. So we could get a little bit more of a short squeeze. Trade with the cloud, I always say. So we're above the cloud on the hourly. Does the hourly give you the permission for upside? Same with the 4 hour. You got back above the 4 hour cloud. Do we see a little bit of an acceleration to the upside? A lot of ambiguity and a lot of uncertainty. We're back above the point of control and the cloud on the 6. So if I had to call it, I would say a little bit of a retrace and then continuation to that 44K. We'll just put it conservatively to that 43.6, sweep of the highs, and see where it goes from there. That's my story and I'm sticking to it. Let's go ahead and take a look at everything. Sorry if you showed late. Big time frame opinion on ES. Sure thing. ES. So ES is in the bullish narrative structure here. It's still going for that buy side. Don't want to stand in the way of the freight train, so be aware of that. Don't try to short for a swing play. Not going to try to call the top. The nuke here called it pretty nicely, and you came down a little bit, and then we came back for a play up here. I'm not sure what those levels were, what I was looking at. Let's go ahead and turn this on. Most likely it was a value area high or a point of control. Yeah, value area high. Okay, so we're gonna take a look here. Let's turn this off because we're looking at downside, but we're gonna just go ahead and mark off some key levels. There's a point of control over here at 49.49, 49.47. Looks like it is a value area low from over here. And stop. All right. There's another point of control down here at that 49.19 region. If we come back to it, we're going to go ahead and project into the future since we don't have data to see where it wants to go, if it wants to go higher. So they've been purging the longs in the bullish narrative, but the purge is immediately met with V-shaped and higher highs. So the overall thing is to look for a long opportunity from a purge. And if we just take this for what it's worth, we're going to go ahead and turn off the momentum really quick to show you the math. Taking our trend-based fib extension level from Friday, February 2nd, take it from the bottom to the top here, and then taking it to the bottom retrace zone. This 236 level at 49.47 is something we need to hold to see higher prices. We came up to that 786 at 49.96 exactly to the pixel, and then rejected off of it. Came back down to the 236 for a order block, whatever you want to call it, supply or demand to come up to some area here. Do we come up to this one level at the bullish area? The thing that is holding us back in the last 1, 2, 3 days is the dollar. So the dollar is creating this seek and destroy. Both sides uncertainty at the all-time high area to come higher or not. As it stands right now, you have some lows to sweep down here at the 236, leading into London. Yesterday looks pretty gross. It was the same thing with NQ. NQ was doing a lot of chop suey, algorithmic chop. NQ starting to break out here, as is the ES. So long-term outlook, do we make a push up for the 786 and the 1 area despite the dollar's moves to the upside? Looks like you're trading with the cloud here. The cloud is reclaimed as of the end of the day yesterday, holding the super trend on the 5-minute. Let's just go to an hourly. So this is a wick to recover to, so coming up for a double top idea. Potentially speaking, Asia trades very algorithmically and might put in the high. If Asia is putting in the high, then do you see a retrace into the London session? So looking at how this traded up for Asia and then did a pre-market up and then dumped, purged, put in the low pre-market New York and then went up. Are we doing very much the same? Do we come up and then come back down to test this zone? We have yet to come back to this pre-market area here. That's one area I would be looking at. And then also, do we come to a lower time frame here? This is a balanced price range gap zone. I mean, technically you did break down from this, but you could be looking at it as a balanced price range up here. ES requires a little bit more precision. So what I would do is, like, for example, in London, we had or even leading into, so here in the consolidation range here that we had prior to the open here in London. So if we did something like this, where you have this retracement region and you're how it came up to here and then came down. Ultimately, it didn't, there was more bullishness for ES. It didn't hold, it didn't go into lower lows, whereas it held these ranges at the 236. Whereas if we compare NQ very much swept the lows here. If you see the lows from Tuesday, it swept it on the pre-market here. So the ES is slightly more bullish. See this low? It was maintained and respected. So the ES looking to put in higher prices by the looks of it, basically coming up to the double top wick here and then possibly purging out. One thing to watch out for is this zone down here. If we take a look, basically trading with the super trend and the cloud here, it looks like it's continuing on its trending up. It is Asia though, so the algorithmic chop suey, if you look at the contracts inside here, very sparse. So whatever they're trying to eliminate, I'd be looking for a possible fade coming down to that potential at some point. And then from there, possibly going into the highs. You have those equal lows, the 236 bullish narrative in play. We came up to that 786 before. Do we come back for that double top or that one level? I'd have to be looking into the contracts to make a decision to see where it comes, but Asia generally fades it. So seeing Asia pump up and leading into a fade into London, New York, and then New York sends it up would make more sense. Get everyone kind of bearish, looking to sweep this low and then protect the low and then go for the high, since we're in a bullish narrative structure. Yeah, so that's about it for ES. NQ, if we look at NQ once again, it came back for the low. It already swept it. So we have a kind of like divergence between NQ and ES, a bullish divergence. Dow also holding this as well, so looking for higher prices. So I would look for the possibility of going higher. You have these highs here on NQ that we could come back and sweep. The point of control for the range coming back to that, coming to that 800 range. That's my story and I'm sticking to it. That's about all I got for now. I got to go into work, so I hope that was sufficing. Nice. All right, well, thank you for coming on into the live and sharing your essence with me in this eternal moment, of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day, and we'll do the same, bringing the fire, the accuracy, the precision, all that fun